Hello and welcome. This is Business Incorporated coming to you live from Lagos. I'm Chimezi Obi. On the show today, the Nigerian Stock Exchange hosts the Sovereign Green Bond Summit in Lagos. And Kenyan banks begin talks with the government to change a law that caps commercial interest rates. Plus, Barclays PLC agrees to pay $988 million to split with Barclays Africa. Let's get started, and beginning here in Nigeria, the Nigerian Stock Exchange is hosting the biggest gathering of stakeholders and top government officials today to deliberate on the sovereign green bonds being promoted by the Ministry of Environment. The Nigerian Stock Exchange is playing host to Nigeria's acting president, Professor Yemi Osinbajo, Lagos State Governor Akinwumi Ambode, Ogun State Governor Ibikunle Amosun, Ministers of Environment and Finance, as well as the Director General, Debt Management Office at the Green Bonds Capital Market and Investors Conference with the theme, Green Bonds, Investing in Nigeria's Sustainable Development. The summit is aimed at educating stakeholders on how to invest in green bonds. And to the markets, and beginning here in Africa, Egypt is still treading waters with the index down by 0.81% at intraday. Now, Egypt's finance ministry is recommending the implementation of a stamp duty on stock exchange transactions of 0.002% on sellers and buyers. The stamp duty is expected to come into effect before May and generate a revenue that ranges between 1 to 1.5 billion Egyptian pounds. And Nigerian markets in South Africa were looking good. That's at intraday. As at 12 noon Nigerian time, the NSE was up 0.39%, while the JSE was up 0.34%. And then for yesterday at the Kenyan stock market, that market was also in the green as at yesterday, Wednesday, by 0.37%. In the Middle East, bank shares were the main drag on most stock markets, and as oil traded in a range around $56–40 a barrel. Our Saudi Arabia's index edged 0.3% lower after an hour of trade, with half of the listed lenders declining at intraday. The index was down 0.35%. Our Saudi British Bank lost 1.3% and National Commercial Bank fell 0.7%. In Abu Dhabi, where banks were up almost half of the total market value, three blue chips fell, dragging the index 0.2% lower in early trade, but at intraday, the index was up 0.34%, as we can see there. Dubai's main index, which outperformed its peers on Wednesday, fell 0.33% on profit taking. Qatar's main index dipped 0.25% as telecoms operator Ooredoo dropped 3.2% after reporting nearly flat fourth quarter net profit attributable to shareholders of 361 million reals. And investors in Europe have continued to eye a slew of corporate earnings reports and, of course, digesting U.S. Fed's minutes released on Wednesday. Let's cross over to Frankfurt for more conversation on the markets with Conrad Busen, my colleague there at the Frankfurt Stock Exchange. Good afternoon, Conrad. Thank you very much for joining us. Well, how is the market digesting the U.S. Fed minutes, which indicates Fed may need to raise interest rates fairly soon if the economy stays strong?
Well, as it looks at the moment, most market people look at the dovish side of the Fed's minutes and not so much on the hawkish side, which means they're not so much focusing on the words fairly soon that the Fed's monetary policy makers used, but on the words if the economy remains strong. You know, Fed's monetary policy makers expressed concerns about potential headwinds coming from the dollar strength And they also, in those minutes, talked about uncertainty surrounding the outlook for fiscal stimulus, which means nobody knows really whether the Trump trade, the speculation that Donald Trump will give the U.S. economy a boost by spending a lot of money on infrastructure, will eventually materialize in the real economy. That's nothing we can really be sure about at the moment, and that's what also the Fed's monetary policy makers have in mind. So the consequence after those minutes came out is that the people on the markets only see about a 34% chance that interest rates will really rise as early as March. This probability is indicated by futures on the bond markets. Yields on the bond markets, US, France, Germany, have come down somewhat after the minutes came out. The currency, especially the euro-dollar exchange rate, remains pretty much unchanged compared to yesterday. And the German share index, DAX, you can see it right behind me, is not really motivated, which indicates that, you know, the Trump trade or reflation trade, as they also call it on the market, didn't get another boost today after those minutes came out.
Right. All eyes are definitely on Trump. But then let's look at Germany. The consumer morale fell to its lowest level. That's in 4 months leading into March, to drop to about 10.0. That's according to a consumer sentiment survey published by GfK today. Now, what factors contributed to this? Talk us through these numbers. Perhaps that could also be another contributory factor to what we are seeing behind you there. You talked about the DAX.
Well, I'm afraid even talking about consumer sentiment in Germany, I have to talk about Donald Trump again, because the GfK, the German Society for Consumer Research, says that the change of administration in the United States and the considerable increase of inflation are the two factors that are behind this drop in consumer sentiment. The GfK, when it asks consumers for its survey, asks several questions, and the most important one during the last month was the one of economic expectations. Here, the sub-index dropped to 9.7 points from around about 22 points in January. That's a significant drop downwards, and according to the GfK, this means that Donald Trump's plans to strengthen protectionism make many German consumers concerned. Of course, job